Hi everyone, welcome to today's trade of the day, and for today's trade of the day I will be looking at the Kiwi dollar, right? So the Kiwi dollar I have here on the 4 hours, and what we can see over here is that price actually made a high, made a low, made a lower high, made a lower low. We can expect price to come back, make a lower high before resuming the lower low move, right? So this is on the 4 hours, okay, and we see that price is actually making a base around here. So as long as we can do a retracement of this move, or we can also do a retracement of this move, because this was where the down move also started, right? We can look for Fibonacci levels to line up, and then we can fine tune our strategy on the 1 hour. So let's go ahead and do the Fibonacci retracement, right? From the high to the low, okay, we see that we can open up all Fibonacci ratios. All right, we see the 23.6% is here. We can do another retracement from this high to the low, and we can see that the 50% level lining up pretty nicely. All right, the 50 with the 38%, and the 50% and the 61.8% is also lining up in line with the graphical overlap, right? So this can possibly be our take profit. Okay, I'm just going to draw a box around here. All right, so this is a take profit zone. Okay, there's another strong Fibonacci level over here, so the confluence level, so we can also have another additional take profit here. So like partial take profit, full take profit. Okay, so just bear in mind these are the levels. Okay, let me just tidy up the charts. Okay, and let's quickly go down to the 1 hour. Right, on the 1 hour, this is what we have. Okay, we see that price sort of rode below. Okay, went lower, right, made a series of lower highs. Okay, went lower, made a series of lower lows, right? However, this time around it came out, made a high that took out the previous one, okay, and took out the two previous highs. All right, and then price came down and is looking to break this level, right? So what I'm thinking is the moment price actually breaks above this level, in the moment price actually breaks above this level, we can play a re-entry up all the way. Okay, so over here, if you guys recall, this is the 23.6% of this last drop, right, over here. So we can actually have a buy entry, a pending buy entry at this level. Okay, this is a pending buy. Where's my, okay, a pending buy. Okay, and then of course what we need to have, and you see the 61.8 is in this area here, right? So apart from that, okay, what we need to look out for is the stop loss. Okay, so we can use a retracement of this last move, right, from the high to, from the low to the high, and we see that price tested the 38. Okay, price tested the 38, but for me, I am pretty much more inclined to put the stop loss at the 78.60 or the 61.8 area. Okay, so let me just highlight these two areas. Anywhere in this area, right, can be our stop loss zone, right? There is a reason behind this. Okay, now we know for sure, okay, that the stop loss is the level which we know where we are wrong, right? So if price were to actually come back down, okay, if price were to activate our buy entry, push higher, but then price were to come back down into our stop loss area, okay, this would mean that price has actually made a lower low which has taken out the both previous lows. Alright, so we know for sure that we are wrong. Okay, so I'm just gonna go ahead and put the stop loss, okay, anywhere in this area. Let's just back it up a bit, be a bit more prudent. Alright, it still works out to have a nice risk reward ratio, right? Okay, about 100 pips, okay, for this intraday trade, right, and with a stop loss of about 45 pips. Okay, so slightly more than 2:1. Last but not least, we can also look at stochastics. Okay, stochastics 21 might be a bit too sensitive. Let's look at 13. Okay, we see that there's a divergence, right? There's a divergence right here. Okay, so the divergence could most likely be in play as well, right? There's a divergence which is happening. All right, and at the same time, if you do connect all the lows of the stochastics, right, just bear with me, a bullish trend line. Okay, you see that every time the stochastics come back to test this support, right, there's always a big reaction in price. Over here, a big reaction. So when price comes back down to this level, we can expect the explosive move upwards. Alright, thanks everyone for your time today. This is Kiwi Dollar trade of today. Wish you guys all the best. Trade safe, stay safe, and I'll catch you guys again. Thank you.